US and European stock indices started the day quite a bit lower, but seem to be picking up a bit now. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yesterday we saw the Dow end the session up 0.6%, the S&P up 0.7% and the Nasdaq up 0.9%. Then after the close we had earnings reports from two tech giants, Microsoft and Alphabet. Both companies beat on earnings, both companies beat on revenues, in fact some very good numbers out there, but the actual result in terms of movement on the share price couldn't have been more different. Microsoft up about 6% in the immediate aftermath of that release. It's come down a little bit now, up 4.6%, but Alphabet down 6%. Now the reason is the cloud. Both of these companies are competing in the arena of cloud computing. Both see it as massively as growth areas potentially, especially with the development of generative AI, which is going to make storage capacity so important. We also know Amazon is in the cloud storage race, but as far as things going at the moment, it's Microsoft that is doing the better work and is seeing more productive and positive growth. And I'm afraid that Alphabet is falling behind, and that's with its Google subsidiary. It's falling behind a bit, and that is why we had this bifurcation in terms of the share prices and what happened to them and how investors reacted to the data overnight. That's what we've got this morning. In fact, it's really interesting that Alphabet has actually soured the tone in the tech sector. Microsoft was standing there as a lone beacon, the only one in the green this morning out of the important tech companies. But nevertheless, we are seeing a bit of a turnaround now. Things are starting to pick up. In fact, all of the European stock indices are back in positive territory, and we've got a bit more of a nuanced picture when it comes to US indices today. Now, we know that bond yields have been one of the big talking points for quite a while now, and of course we also saw this big turnaround where bond yields, the 10-year Treasury yield, hit 5% before reversing very sharply, and that coincided with statements from two big Wall Street investors. First of all, we had from the old bond king, as he was known, Bill Gross, who used to run PIMCO. He said that he thought the rally in yields was basically at its end because he sees signs of a recession coming as soon as this year. And then Bill Ackman, who owns Pershing, big hedge fund, he has been banging the drum for higher yields, lower bond prices for quite a while now. And he came out and said, well, actually, I've closed out my short bond positions. And so this is seen as adding to the fact that we got yields of 5% as a trigger for a turnaround. And we saw some buying of bonds. That has helped take the pressure off equity prices. But we have moved up a bit. We went from about 5% to about 4.8% very, very quickly. We're now at about 4.87% on that 10-year Treasury yield. So you could say we're not out of danger yet as far as the stock market bulls are concerned. We're going to hear from Powell, Fed Chair Powell tonight. We're going to also hear from Christine Lagarde of the ECB late afternoon. Bear in mind, tomorrow the ECB will make its latest interest rate decision. More earnings on tap after the close tonight. We've got Meta Platforms. We've also got IBM, T-Mobile and Boeing today. We also had Snap. They came in, they were pretty positive. We're up 20% at one stage, but have given back all of that on the back of fears that advertisers are cutting back on their spending since the outbreak of hostilities with Israel and Hamas. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading.